Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 72 in this road to 100k realized return challenge, and I decided to make this video live. Before the trading session began, and you're going to see me put the trades in loco as we speak, because as you probably recall from the last video, the latest video that we did, we were betting on the possibility that the market would go up at the beginning of this week, and as a result of that, we would be able to get a higher premium on our trades of the Qs. Now, if you recall, the 630 call has a premium of 40 cents expiring on Monday, today, and the one expiring on Wednesday, the day of the Fed meeting, it had a premium of 221. So the market is going to open, let's see, and today is bigger, so our bet was good still, and this one is not the case, but the one on the market or on Monday was actually better. So yeah, we were vindicated in that regard. I think it makes sense. Let's try to do things this way. We're going to put this slightly above. Let's push this up a little bit more and see if it hits, which I think it will. So yeah, hopefully this trade will go, and it went. So we are in. We managed to sell our calls expiring today at a slightly higher strike price of 631. So now we are hoping that we will be able to have a $500 capital gain on this, because it's $1 per share, 500 shares. So yeah, we'll see what happens if we hit 631 or not. If not, by the middle of the section, after some time value is lost on this one, we will buy back this one, and we will try to sell the 630 call so that we can try to get rid of this and get our money back. Apparently now IWM is trading at an all-time high, so yeah, we have to probably be a little bit more defensive on this one. Let's see, so this is 87. I think this is probably a good one. Yeah, it's not that ideal that we are going to make this trade at an all-time high. Probability of profit 87%. Let's push this a little bit more and see if it hits. Well, if it hits, that means that the price has come down a little bit. So yeah, and it hit right on the money. So now let's just put in here, before we forget, 87%, and let's input our information over here. So the trades are done. Let's see how much buying power we have left. 5.7. So we still have enough cash on hand to make one more trade. Yeah, but it's a tough one. That let's see if with 5 and 7 we need to make probably some calculations here. So if we get back, let's just assume that we are going to sell these Q's shares at the cost base, so 315 plus these 2500 from the put that we assigned as collateral. We have this, and let's just see that. All right, plus we have 670 euros. Let's just use the exchange rate a little bit more unfavorable for us at this point, 16. So we have this amount of money. So if we sell IWM's puts at 250 a piece, let's see, so it's 30.86. so we are not going to need this money here, even if we go for even if we sell these shares of the Qs and we go for the IWM puts only, we still have this money left over. So probably the best way for us to proceed is to go for some XLF once again. Apparently it come down a little bit, so but we are going to do this probably a little bit more conservatively. Let's see, so this is 93%. Well, this is already quite low, but yeah, let's try to do this one. We are going to bet that this is not going to happen, so this is a 93%, and let's see what happens. Let's see if it fills up at 11 cents or not. Yeah, apparently it will not, but because it's still end of the session, that effect will be minimal at this point. Let's see if we are able to sell this at 11. So now it already went down to 9. Well, we need to get this out of the way. So, and it's only one. It's only one. It's not going to make that much of a difference. Let's see if we can fill up at 10 and get this out of the way. It's not that good, but that's probably the best that we can do at this point. Yeah, because we don't have any other alternatives. No, we will keep it like that and see what happens. So for now, so this trade opened at December the 8th. So this is 8th. And this is going to expire on the same day. All of them will going to expire on the same day. So this is the Qs, this is a covered call, this goes to 631, 5 of them. Let's just copy here because our actual collateral is 350,000. Let's see how much we managed to get from this one. So it was 39 cents, which is reasonable. How much we pay in commission? So we paid 232 and 102, so this is 334 basically. But let's put the entire calculation here as well so that we don't miss anything. 1.02. All right, and let's wait and see what happens. Now for some reason this is not going okay, but yeah, we'll do it here. IWM. Yeah, so this is a cash covered put with a strike price of 250, I guess. 251 actually. 251. Only one, and we managed to collect 35. So not that much, but yeah, we'll see. 60 cents in commission. So this is it. Let's see if it already went. No, it didn't went. And probably if it goes much worse than this, I'm probably not going to keep lowering the price. No, it's still 10 cents. Just for the sake of the calculation, let's see how much does it give us. So this is a 52, this is only 1. If we get 10, and keeping in mind that this goes for, actually let's do this. Wait, let's cancel this for the time being, and see if it's actually a good use of our money or not. So this is going to be on the 12th. It's going to expire on the 12th because yeah, Friday is the 12th. If we let it go until expiration, which is our assumption, so this does not matter. Let's just assume, I don't know how much it would be. Yeah, we have a representative trade here, one cash covered put on XLF, 80 cents. So let's use this one just for the sake of the simulation. If we let it go, expiring worthless, this would give us a return of 12.92, which is not that great. If we manage to buy it back, and we probably have here, yeah, we also pay, let's just say that we pay 38 cents on the exit. Yeah, this is not that good either, and if we pay even 80 cents, it's going to be even worse than that. Yeah, it's not that good. but yeah, it's a bummer. If let's see if the price goes up again. At this moment, we don't lose much if we wait if we wait a little bit more time to see how it develops the XLF, the price of the premium of the XLF put that I wanted to sell. We don't lose that much time in waiting because we are 5 trading days away. The theta effect due to the passage of time is very small at this point. Almost, yeah, it's very small. So we might as well wait a little bit more and see if it goes up. And if it goes up, the premium, that means that the stock is coming down, and that makes it probably a little bit more worthwhile for us to get into the trade, because if we manage to sell a put, for example, by 12, yeah, it's going to 13. It's much better, and even if we let it expire, it goes into the 15%, which is much better given the fact that, of course, this is a low volatile stock, or ETF rather. Yeah, so I think, yeah, if we go to 13 is good. All right, so let's wait a little bit more. We are not even obligated to do anything today. We can wait. We can still capture a similar premium tomorrow. So yeah, I think this is pretty much it. By the way, one thing that I wanted to also tell is that this is going to be a big week, and especially I've been watching the trading, the company releases that are expected for this week, and much of that high volatility, that implied volatility that it is on Wednesday due to the Fed decision on the interest rates, apparently is also being amplified. We also have GameStop here, the earnings release that's going to be on Tuesday, but we also have on Wednesday, let's see if I can find it, we have Oracle releasing its earnings. We have Synopsys. Synopsys is the company that NVIDIA bought a $2 billion stake a few days ago. And let's see if I can find it. I think I saw Broadcom here somewhere. We have Costco, which is also an important one. It's in the, it's a wholesale, so it's not in the tech sector, but still it's important because it's quite a large capitalization. But I think I saw the Broadcom, but I cannot tell what it is. Let's see. I can't find it. Strange. I was almost certain that Broadcom was going to release its earnings this week. And it is December 11th, so it's going to be on Thursday actually. No, it does not say in here, but yeah, it says in here it's going to be. So this is also a point of volatility for this week. This is one of the biggest stocks in the Nasdaq, so we have also to account for this. Not on Wednesday in particular, but on Thursday. There's going to be for sure some market volatility on this. Let's see. So we have here 252. This is still quite high. Yeah, this is, if we sell 5 of these, yeah, this is going to be a pretty good one. And even for 3 days in advance. So yeah, it's still a significant jump. So this is something that we can keep in mind, but we will see what's going to happen if we are able to sell our Qs shares or not. If we manage to sell before the Fed decision, I'm probably going to get back on the Qs, and the reason for that is because IWM currently is at a all-time high, so it's more likely that it may have a correction. The Qs are more distant from its all-time high, so yeah, by that factor alone, it's more likely that the Qs may retain its value over the life of our option. So we'll see. But for the time being, yeah, this is pretty much it. Feel free to leave your comments in the comment section down below. I am also available on LinkedIn in case you need to ask me any questions, and of course feel free to like the video and subscribe to the channel, and we'll reconvene at the end of the week to see how the trades played out and to close out this week number 72 in this challenge. Yeah, and I'll see you there.